There has been a swift narrow correction that we've witnessed over the last 3 days in the Indian equity markets. But a recovery was set in motion during the second half of yesterday's trading session. But which are the levels to watch out for going forward, and is there any significance of retracement levels? Let's map the recent fall that we've had, starting off with the Nifty that managed to decline 450 points in the last 3 days. However, yesterday's close was near the 50% retracement mark. Now let me just highlight what retracement levels are as per Fibonacci retracement. The 38.2% retracement for the Nifty stands at 17,500, which is the immediate support level to watch out for. 61.8% retracement stands at 17,600, which would become an equivalent resistance for the market. Moving on to the Nifty Bank, that has in fact fallen more than 1500 points in the last 3 days, and the Nifty Bank also closed near its 50% retracement mark. The support level going forward, 38.2% retracement, stands at 37,133, and the 61.8% retracement stands at 37,507. Now, there is an importance of the 61.8% retracement, as per historic correlation. What happens is the market never falls or rises in a straight line. There are always zigzag movements. So let me highlight one by one the drawdowns in the market that have been in the recent past and the importance of the 61.8% retracement level. And this is ever since the pandemic started. So, the first reference point that I have is April 2020. The eventual max drawdown for the Nifty was 11%. However, it retraced to 61.8% of that particular fall before falling again. Similar was the case in September 2020, 8.5% retracement. However, this time around the retracement was 50% before it started falling again. Feb 2021 drawdown of 6%, retraced 61.8% before it started falling again. April 2021, the last time we had a 5% plus correction on the Nifty, 5.5% was at that point in time. It managed to retrace 61.8% before it started falling again. Once again in June 2021, the drawdown was 2.5%, and the Nifty spent the entire month in consolidation range. Similarly, in July 2021, the drawdown was 2.8%, and the Nifty consolidated in a tight range. So, these 2 months were consolidating in a particular range of about 2 to 3% for the Nifty. So no retracement levels were moved. However, if you have a look at the chart of these 2 months, there you can see that it was quite zigzag before we eventually broke out of that range and hit record high levels for the market. Coming to recent times, August 2021, the Nifty's drawdown was 2%. It retraced to 61.8% before it started falling again. And once again in September 2021, the retracement level of 61.8% comes into picture for the Nifty at 17,615. So there is clear evidence that since the pandemic started, each fall, though it has been narrow and shallow, the 61% retracement mark does hold key significance. So going forward, 17,605 would be the level to watch out as far as the Nifty is concerned. Also important to remember that we have not had a 5% plus correction in the Indian equity context since April 2021. So interesting times lie ahead, whether we go on to make fresh lifetime highs or the 61.8% retracement acts as a key hurdle going forward.